traders, welcome to the TMT special edition video on gold, and we put this out bi-weekly for $9.99, gold and crude oil. Take a look, guys. It is invaluable. You need to see this for $9.99. It's bi-weekly. We do crude and gold. This one here is just for gold. Want to show you what we put into it. A lot of time that goes into this, into these videos, so I hope you enjoy. Anyway, let's take a look at gold in particular, okay? Everybody's loving gold. I am also looking to buy gold. I like gold itself, but not until it pulls back. All commodities, if you guys trade commodities, you all know that it will overshoot and then give us a decent correction where you can buy at a better price. You definitely don't want to be looking to buy gold at these areas. Now, can gold go lower? Higher? Absolutely. If we have some kind of massive panic in the markets, gold will go higher and not go lower. But it will go lower at a different time. But it will go lower. So remember, just like any stocks, don't chase anything. It's going to give you another opportunity, okay? So let's take a look at the commitment to trade reports. Now, this is not a timing tool, but when you get to the meat of the move, this is where it becomes valuable, okay? You could see here that the speculators, which are generally called the dumb money, they usually tend to trend gold, okay? And you could see that this is the in the line chart is gold itself. You could see that they start buying and they start to trend. Now the commercials, which are the producers, they're always going to be short, okay? But it's really when you want to take note of is really here, where at the end of this move, you notice how the speculators keep adding and the producers, the commercials keep shorting. This is now where you say that, okay, well, we have a big run here. You could see it in the background that gold is extremely now overbought. It's not a sell signal, but it is very overbought from the January lows you could see here. And the commercials, which are the dumb money, smart money, that need to hedge against their production, they're shorting more. They're locking in their price at 1,300, 1,275. That to me is big, because now you're saying, well, the speculators, they keep adding, thinking that this trend is going to continue. All right? That's when you got to be careful. That's when you got to use caution. Now, when is the speculators good to look and follow? In the beginning of a move, right here. Okay? Because they trend. They're trend traders. They want to trend. So when they see something big like that, and they're putting a lot of money to work, where gold is here, down at these areas, this is when you want to look at when you're seeing the uptick in these price bars, in their position bars, and they start to rise, and you'll see here, as you can see, crude starting to rise here. That's when you want to look at it. But when you come into a tail end of the move, that's when you want to pay particular attention to the COT report for the commercials, because they're usually right, okay? Now, it hasn't looked that way, but they're usually right, all right? Just wanted to give you guys a heads up on that. Now let's move on to the another chart here that I'm showing you. This is the Huey index, the gold bug index. You can see on the weekly, we have some big overhead resistance, which the 200 week moving average. Guys, this is significant. This is a very big area where I believe that the Huey will probably fall back, at least get to the 20-day moving average. And you can see here, we are at the 20, way away from this area. And every time when we get seriously away from it, what happens? Well, we backtest, right? It's the same thing. What happens? We backtest to the 20. So you can do this all day long, guys. When we get farther away from the 20, we usually get a back test. So we usually get the sell-off that we're looking for, okay? That's the Huey, the gold bug index. Bullish percent GDM, gold miners index, based off a point and figure chart. Very, very reliable. And you can see just here, when we get to these areas here, okay, we usually get a sell-off. We're way beyond that right now, way beyond it. At 80, 72, this is also telling us that we're in a position for a market sell-off. Now, remember, we're not just going to go out there today and just go out and sell the market, right, and sell gold. We're going to wait for a trigger, wait for your strategy, your setup to tell you that it's time to get short an index, an ETF, or a stock, or a future, okay? But I'm just saying that this is pretty much close to being ready. And the last couple of days of last week, Thursday and Friday, really wasn't anything to write home about as far as being, being bullish on gold. Gold itself, spot gold weekly, nice upward channel. Again, the 200-week moving average is just above it, guys. Got to take note of this. Be very careful. Once we get the sell-off, I'm going to be inclined to look to buy gold. I think gold's going to be a great a great purchase, but not at these levels. I keep hearing, oh, you got to buy gold, you got to go. Just if it ran away from me, so be it. But I wouldn't want to be looking to buy gold extremely at these areas here where gold rallied from a low of 1,050 to 1,274. 275-point move in 9 weeks. Come on, that's a little bit much. Looking for that pullback. Okay, that pullback will come. Now, here's the big area. Okay, 1220 is going to be very big for gold. If it breaks 1220, I would look for further declines back to the 200-day moving average right here. If she holds the 1220, then I think you can see higher prices, but only we take out the high of 1306. Okay, that is the high right here, 1306. We need to take that out. Now, even if we get this pullback, right, we need to take out 1306 in order for this market to go higher. All right, even in the pullback. Now, if we just pull back to that 1220, still need to take out 1306 for new renowned strength and a move forward with the bull market in gold. Okay, I do think gold is entering a new phase of a bull market, but it does need to pull back. GDX, just want to show you, we have a nice little pennant formation here, real nice. But again, it could break either way. Usually it's a continuation, but up at the end of the move like this, I think I'm looking for more of a break lower. Tagging at 50, and even if you get to 19 here, which would be really, really healthy for gold, we could start looking for GDX to move up as well. Now, remember, GDX actually lagged gold the last couple of days, and usually the gold miners, they rally. They usually tend to lead the metal itself, okay? And then gold catches up. But I just want to show you Nugget as well. Nugget tagging the 78.6% retracement, Fibonacci retracement right here at 111.51. It did break above it and did overshoot, but you can see here, guys, clearly really, really extended. And again, this move from high to low is a 76.8% retracement. And again, same thing. You could see the GDX because they're the same, a nice big pennant, all right? Guys, I hope it helps. I am looking for some lower prices in gold first before we are a buyer. That doesn't mean that, if you're inclined that you don't want to short gold, I understand perfectly. Just step aside, but wait for the purchase in gold. It should come. We do have a very strong dollar. I mentioned that also, that we had a big bullish falling wedge in the dollar itself, and that's something that really hasn't affected gold the last couple of days, but should play. Here's that daily chart of the UUP. You can see that nice big bullish falling wedge. We broke out, had a really nice week yesterday, but again, tagged the 50-day moving average. And what happens on bullish falling wedges? They usually what? They usually break out and back test, making that higher low from this previous low, and then another move higher. I don't know if the dollar is going to be in a raging bull market, but I would suspect it tags 25 shortly. That should affect gold and the metals and all of the commodities in itself. Quick look at the weekly chart. You could see, is this just a big bull flag? I mean, it could be. It tagged the bottom of this line, and again, now it still has room to 25. That's a 200-day, as I mentioned. But over here is the 200, is 25.52. So logical spot for it to hold and then start to sell off again. So we shall see, guys. All right. I hope it helps. I hope you enjoyed the video. Check it out. $9.99 bi-weekly for the month. You get crude oil and gold with some actionable levels as well. All right, to trade off of. Have a great day, everybody. We'll talk to you soon. Take care.